Hey, good morning, everybody. Today is Wednesday, May 6th, 2015. My name is Cliff Backus. I am the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Markets gave back 2 days worth of gains yesterday on heavier trading volume. Declining issues bettered advancers by nearly 4-1. Large caps continued to outperform small caps on a 10-day moving average basis. This is a good sign for the longer-term health of the bull market. Typically at bull market tops, small caps outperform by a wide margin. Since October, during market corrections, large cap stocks have outperformed small caps on a 10-day moving average basis. The correction low has coincided with a crossover of small caps outperforming large caps. Right now, large caps have a significant advantage over small caps. While the market may be oversold on a short-term basis, our 10-day moving average of large cap versus small caps is indicating this correction may not be over. That noted, aggressive traders may want to use any market weakness to begin nibbling back on the long side. Conservative traders may want to take advantage of any short-term bounce to continue to accumulate cash. For conservative traders, cash remains king until we see whether this is a case of sell in May and go away, or if, like the past 2 years, we get a nice summer rally. We'll continue to watch for industry group rotation if the market does resume the uptrend here. Let's see where the strength in the market is rotating to. What we're looking at here on your screen is the HGSI, High Growth Stock Investors, warehouse of 7,000 stocks. What we've done is filtered those stocks by stocks and groups moving to the upside. We then take those 101 stocks and we import them into our Spectrum Analyzer. What the Spectrum Analyzer does is it gives us a snapshot of where the strength was in the market yesterday. By following the daily industry strength, we should be able to pick out any industry group rotation. So where was the strength yesterday? Yesterday we saw strength in consumer finance, oil and gas services, banks, IT services, and application software. We've seen a little bit of application software, and we've seen a lot of oil and gas recently in the market. Oil and gas seems to be a good place to begin looking for rotation. Let's take a quick look at the NASDAQ Composite. NASDAQ Composite yesterday was down 77.6 points, or 1.55%. You can see that the NASDAQ undercut its 50-day moving average, which is a bearish sign. We also closed right at the bottom of our daily trading range, which isn't going to make the bulls happy either. Right now, the NASDAQ is selling at 49.39 and is bracketed by support down here in the 48.11 area and resistance up here at 52.42. Right now, our 1 to 6 month timing model is showing a don't buy signal for the NASDAQ. Yesterday, trading volume was heavier than the prior day, giving us another distribution day. For you followers of William O'Neill, the NASDAQ is currently in a confirmed uptrend, but that uptrend is under pressure due to this cluster of distribution that we've seen over the past month or so. Let's take a look at the S&P 500. The S&P yesterday was down 25.02 points, or 1.18%. S&P closed at 2089. S&P is bracketed by support down here in the 2040 area and resistance up here in the 2120 range. The S&P yesterday found support at its 50-day moving average, also closed at the very bottom of its daily trading range. Right now, our 1 to 6 month timing model is indicating a market in transition. Trading volume yesterday, while below average, was still higher than the prior day, giving us a distribution day. The S&P 500 has been in a confirmed uptrend since January 8th, but that uptrend is under pressure due to this accumulation of distribution over the past month. Let's take a look at the MACD histogram. Our MACD histogram yesterday fell back below the 0 line, trading at minus 1.31. It's also in a mini downtrend. Because our histogram is trading below the 0 line, and because it's in a downtrend, our immediate bias on the S&P 500 is bearish. Before we go, I want to talk a little bit about Gray Television. Gray Television is engaged in television broadcasting services in 44 markets and broadcasting 140 programming streams. Gray Television has been in this second stage base. It found support at its 50-day moving average. We've been watching this trend line right here. And the stock yesterday broke that trend line on about 210% of average daily volume. Aggressive traders may want to pick up some Gray Television here. Keep in mind that the NASDAQ is on a don't buy signal. The S&P 500 is indicating a market in transition, and our 10-day moving average of small caps versus large caps is indicating that this market correction may not be over yet. That said, aggressive traders can probably buy Gray Television here, keeping a stop about 3% below the trend line. That's about all I have for today. If you want to talk about Gray Television, you want to talk about any of our trading or market strategies, please feel free to give me a call. Drop me an email, make an appointment, come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. A reminder, if you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.